Good afternoon, everyone, and welcome to Trending Thursday here on our YouTube channel, live stream. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here, and glad to see all of you that are here as well. Happy Glenn's Day, everyone. I like that, Sergio. Today is Happy Glenn's Day. Love that. Love that. All right, for all of those regulars, thank you for being here. For all of the new people that are here, welcome. Welcome to Trending Thursday. What is that all about? Trending Thursday is we look at stocks and making news, and we use the power of the VectorVest software to analyze those stocks to determine whether it's something you want to be in, if you're not in it. If you are in it, should you still be holding it? So we use the stories, but we use the VectorVest software to back it up to determine whether or not it's something that you do want and make decisions. And at the end, make sure you stay here to the end, because at the end, I will be analyzing stocks on the fly. So we'll be looking at your stocks that you're holding, stocks that you may have heard about on television or in an email or a newsletter or something like that, and you're just interested in how the software will help you. Stay here till the end. At the end of the presentation, I go through in a quick fire fashion. Can you say that 10 times fast, Joey?
No, not even once.
Quick fire fashion, where we're going to look at all of your stocks, or as many of them as we can. So make sure you're here for that. Throughout the week, when I see some comments in the comment section on some of the videos, I write down some of those stocks, and I only hope that you're here to see them. All right, so another thing, if you're also new to the page, if you haven't already subscribed to it, we have grown our YouTube channel by leaps and bounds. How long have we been doing this, Joey?
January last year.
So about a year, pushing a year and a half. We've more than doubled our subscribership, and that's all because of you. And that's the way that we keep putting and building our footprint in this social media platform. We want it to grow, but we want to be able to provide for you the content that's going to be apropos to what you want to listen to. Now, that wasn't a Glennism. If you're new, you will be introduced to one or two along the way. What is a Glennism? It's a word that I make up that sounds good. That's all that matters. So you will be introduced to those as well. So for all of the people that are here, thank you for being here. I appreciate it. And you know, we always start, before we get into anything, we always start and take a look at what's going on in the market. Market's direction is key. The direction of the market affects 80% of the stocks in the market. So in order to be on the right side of the market, you need to be on the right side of the trend. VectorVest does time the market, but when I say we time the market, we don't predict or prognosticate. Write that down. That's the word of the day. We don't prognosticate which direction the market's going to go the next day or anything like that. We are trend followers, so we keep our subscribers on the right side of the trend of the market. So let's go start off with our market timing, looking at the home page of the VectorVest software. Now, many of you who may not be subscribers to the VectorVest software, Joey's going to put a link in the room. Are we still running that special?
Oh, yeah.
We're running the special, 99 cents for 30 days. 99 cents for 30 days. If you like what the software has to offer you, you have nothing to lose. 99 cents. You can't even go to Starbucks and get a coffee. Yes, I'm a New Yorker. You can't get a coffee for 99 cents. But the VectorVest software will provide you with so much more than a cafe macchiato will in regards to growing your portfolio. So let's start here on our homepage. Our homepage is the entrance into the software. The homepage will give you a lot of information to actually talk about what's really going on in the market. It's one thing to listen to the people on TV. It's one thing to listen to your friends or your uncle or anything like that. But what you need is to be well informed, not entertained. How about there's a guy on CNBC who's a great entertainer in the field of the market. But you know, if I want to be entertained, I can watch Netflix. But if I want to be informed, then the VectorVest software will provide you with the useful information to make the right decisions. All right. So first thing I want to look at, what are all the indices doing today? Well, they were all down. If anybody's been tracking the market's been pulling back. And you're probably wondering, What should I be doing with my stocks? I'm going to cover a little bit of that today. We don't always do that, but this is probably a good teaching time to help you to manage the stocks that you're currently trading right now. All of the major indices, well, not all of them. The Dow is slightly up today. All the other major indices, to include our VectorVest composite, is down. So we call this a mixed market, where one part of the market is up, or one index, and the rest are down. So we got a mixed market. What does that tell me? The market is going through some semblance of indecision right now. It can't fully get on board with going down or with going up. So as I look, all of the major indices, they are mixed. I look over at our indicator, or our daily, what I want to call it, daily traffic light. All right, just like a traffic light, it's got red, it's got yellow, and it's got green. Because all of our indicators are 3 ticks. We didn't fix that because that's what I'm missing. I'm missing it. Where is it? I'm missing my color guard with the 6-day snapshot. All right, so we didn't fix it. Joey broke it. That's what happens when you get to be producer. You get to take all the hits for all of the bad things. But if it's all good things, it's all me. There you go. That's just the way it works. All right.
I'm not producing.
Well, you're not my producer. Then what are you?
I'm just an employee.
You're just an employee. Way to go. All right, employee, then make sure it don't break next week. How about that? All right. So when we're looking at our daily traffic light, red, that's because 3 of our market timing indicators are in the red. The color guard is bearish, and we give you guidance. We don't advocate buying any stocks at this time. So if you're looking to buy stocks long, probably not the right time to pick up any new long positions right now. All right, so from here, I'm going to go into the first story. We can see that the color guard is bearish. We can see we have a mixed market. Now the S&P 100 just went green. How about the S&P 500 just went green? The market is really matriculating back and forth between being bearish and being bullish today. A lot of indecision being played in the market today. Let's do this. So let's talk about why the market is doing what it's doing. We're going to go to our first story. So our first 4 stories will all be put together talking about what's going on in the market. Now, the Fed chair, Powell, stocks fall as the Fed's Powell says outlook highly uncertain. What do markets dislike the most? Uncertainty. And with that being said, the market, when we get uncertainty, the market tends to go down. Shares have beaten down energy, airline, bank stocks are among the biggest decliners, and that was just a couple of days ago in regards to what's going on in the market. This was the precursor to what's going on in the market right now. As we scroll down a little bit, and this was on May 13th, which was yesterday, the Dow Jones Industrial dropped more than 500 points yesterday after the Fed Reserve Chairman Jerome Powell said further stimulus, you see that? Further stimulus could be needed to support the economy's recovery from the coronavirus-induced contraction. Stimulus, we give out more money. At some point in time, the bill comes due. How do we pay for all of the stimulus that goes out? All right? How do we do that? We print more money. As we print more money, what happens? We flood the market with money. The dollar gets what? Devalued. Inflation goes up, the whole 9 yards. There is a ripple effect. So let's just look at that first story. The Fed is saying that we probably need more stimulus to support the economy's recovery. Understand this. The Fed has opened up the spigots to make sure that we can keep our economy afloat. So they're buying back bonds and they're putting money into the economy, and we're just putting money back out to everyone. Which, listen to me, don't get it twisted. I'm all about making sure all of our businesses and people are taken care of. Absolutely. Making sure that they get unemployment, make sure that they get the stimulus. That first stimulus that went out, the biggest stimulus plan that we've ever put out at any time. Now it's in the House right now to put out another stimulus plan, so that I saw a story that people are to get about $2,000 a month until the end of the year or something along those lines. Man, that's a lot of money to be given out, but I understand that it's needed. But at some point in time, from a fiscally responsive standpoint, how do we pay that all back? All right, the next story. Powell says Washington will need to spend more. This is to piggyback off of that other story we just read. Reversal of economic fortune has caused a level of pain that is hard to capture in words. As we scroll down, the Federal Reserve, this was also done yesterday. Federal Reserve Chairman Jerome Powell urged the White House and Congress to spend more money. The Fed, think about that. The Fed is telling the government to spend more money. Usually it doesn't work like that. The Fed will even, now what is the job of the Fed? The Fed is to make sure that unemployment is good or employment is good, and they check on interest rates. That is the job of the Fed. Well, we had more jobs got lost today. 3 million more people have applied for unemployment. The number of people that are unemployed percentage-wise is a lot. It's a lot of people due to coronavirus that are unemployed. So the Fed is saying to the government, hey folks, we need to spend more money. All right. Now, even with the spending of more money, what else does the Fed have the opportunity to do to help bolster an economy? They lower interest rates, right? Lowering interest rates normally ramps up an economy. Well, the Fed has already lowered the interest rates. We're right now at 0 to 0.25% on interest rates. But how about this? The Fed isn't considering negative rates. Now, I never thought that I would ever hear in my lifetime a president of the United States saying, yes, we should go to negative interest rates. Whether good, bad, or indifferent, I never thought that I would hear those words come out of a president's mouth. Now, do I understand to a certain degree why that is? Sure, because the president is trying to make sure that we across the globe still have the strongest economy. And as of right now, we still do. The coronavirus has affected countries globally. I totally understand that. But even with that being said, our economy is still strong compared to everybody else's, which makes our dollar strong, which makes it tough for gold. Normally, when the dollar is devalued, people run to gold. Gold had gone up. Now it's settling in a little bit. So a lot of people still trying to trade the gold stocks. Be careful with that. What's going to happen, we need the dollar to get lower in value. All right. And the last story in regards to what's going on markets-wise, companies' next coronavirus challenge is getting cash-strapped shoppers to spend. So the Fed is telling the government to spend more money. The government is looking at already putting out another stimulus package. And companies need people to come back, open up the economy, open up the country so that people can go and spend money. Well, these brick and mortar stores are hurting because they don't have customers. Whereas the online people are still making money. How about now, everywhere you go, whether it's to go shopping or whatever it is, you can do everything online now. Those companies are still making money. Amazon, Shopify, those companies are still making money, but the brick and mortar stores are hurting. So even once the economy opens up, that's the next thing. The economy can open up, but if people are still out of work, what money are they going to spend? Think about that. So that is huge. Now, all of these things are affecting the market as a whole. All right. My first 4 stories are really talking about why the market is doing what it's doing. Now, we're going to look at the market visually to see how all of these things are playing into the picture. I'm going to go into, did I do this wrong? I probably did. What did I need to do? And let's go to the viewers tab. Let's go look at what watch list I have set up for today. We'll go to the watch list viewer. We're going to go to the YouTube. And today's date is 5/14. Every week, I set up a watch list of all of the stocks that we take a look at. This week, we're only looking at about 11 stocks. But I'm going to spend a little bit more time in market timing today, as well as a very important but powerful tool to help you define what industries are always rocking at any given time. The 2 indicators that we use to look at the market, we use our own VectorVest composite, which is an indexed arithmetic average of all of the stocks that we track. We track over 8,100 stocks in this one indicator right here. We feel that it is a better representation of broad market movement. But for some of you who still do not have the software, would you use the S&P 500? So here's the spiders. I'm going to right click on them. I've got them tagged individually. I'm going to right click and I'm going to view the stock graph. Oh, the stock graph pulled up on this side. How did you make that happen, Joey? All right, whatever. I'm going to look at a 3-month graph. Why do I always like looking at a 3-month graph? Well, what happens every 3 months with stocks in the market? Earnings. Earnings is the biggest mover of a stock's market price. So when I'm looking at market timing, whether it's the VectorVest composite or the S&P 500, I always want to keep in mind where earnings plays a role. All right? What's the market doing? Coming off the March 23rd low. That's where I'm ready to finally say that that was the market bottom coming through from coronavirus. Let's go to, change that from cursor to Dateline. Let's go find March 23rd. There's March 23rd. You can't see it because I'm in the way, can't you? Let me move this over just a little bit. Spread this out. There we go. March 23rd is right here. Here's coronavirus. Where it hit, we fell, we fall down, go boom, we stop. We go, whew. Now the market's starting to move up. We moved up, we pulled back a little bit. Remember, what we're looking at in candlesticks is the VectorVest composite, index arithmetic average of over the 8,100 stocks tracked in one indicator. We moved up, we moved down. People were like, oh man, and then we moved up nicely. What moving averages do I have on the VVC? I have a 3 and an 8 exponential moving average. Why? Because it works. Because it works. When the market's trending up, green is above red, the 3 is above 8. Love that. How about when the market moves sideways? The 3 and the 8 stayed in effect. Moving up some more, pulled back down to a level of support right here. What stayed in place? The 3 and the 8. Market moved up some more, found a level of resistance at about 43.79. Now, yesterday, the 3 and the 8 failed. Finally, after all of this nice upturn, the 3 and the 8 failed. If I am investing in the market, that was probably a good opportunity to say it probably is a good time to take profits off the table. Excuse me. Especially as the market was moving up, always remember it's okay to take profits off the table. You can't go broke taking a profit. I know everybody knows that, but you can't. We have follow through today where the 3 and the 8 is still in place, but what are we testing? We're testing a level of support. Let me go, is that my last close? Yeah. We're testing a level of support. I'm going to draw a horizontal line right about here. There we go. I'm going to make that a little darker for you so you can see it. That's a beautiful level of support. Former resistance, look at where the market fell to that level, boom, fall down, boom, fall down. Breakthrough, follow through, we're above. Now this level of 41.62 is being tested again, but now is a level of support. This is why the market is waffling. This is why the market is showing signs of indecision. The level of support for the over 8,100 stocks is being tested right now. If I'm looking at stochastics, I don't look at stochastics. Let's take that off. We can see the volume of the market. What's it doing? Even with this nice upward move and even with the sideways move, volume on the market is still pretty consistent for the most part. Now, that's on the VectorVest composite. Let's go to the S&P 500. It should almost look alike, right? Notice my levels of support and resistance. The VectorVest software will automatically draw levels of support and resistance for you. So you don't have to. But I'm looking. Look at the market run up, level of resistance, broke through, found another level of resistance where it was touched here twice, breaking down through one level of support, now testing another level of support. Overall, folks, what's the market in? A channel. When the market's in a channel, it's not moving up, it's not moving down, it's a lot moving sideways. Again, an indication of the market is having a hard time determining which way it really wants to go. All of that being said, how do you trade the stocks that you're still currently holding? Right now is a good time to tighten the stops. All right? Right now is a good time to tighten the stops. I'm going to go back to the VectorVest composite. Now, remember I told you we time the market? Well, we've got timing indicators no matter how aggressive or conservative you are as an individual. I'm going to put on the fastest market timing call we have called the primary wave. That looks at the week-over-week movement of that VectorVest composite. It is a fast signal, so you will be susceptible to whipsaws. It's the fastest signal we have. The last down call we had happened to have been yesterday. So as a more aggressive trader, I would have been playing the market to the downside today because end of day, the primary wave went down. Well, what if I'm not that aggressive? Well, let's go put on a good middle of the road timing signal called the DEW. Notice that we had an up call on April 6th of 2020, right here. Up call on that signal, you see a green up arrow. Notice that even as the market is pulling back, no down arrow yet. So using that signal as a market timing call All you're doing is tightening your stops. Why? Because the market's pulling back down. Is it telling you to get out of the market yet? No. The signal has not issued a down call yet. Let's take a look at another timing signal, the green light buyer. Now, you may be asking, well, how do you get access to all of this? Take the trial of the software for 99 cents. One. Number two, there's a free resource that I give you every Tuesday called Training Tuesday, where I take you through each and every tab in the software. If you want to learn a lot more about how we time the market, that training series is for you, and it's free. It takes me 16 weeks to walk you through each and every tab in the software in detail. So you want to learn more about these market timing calls that I'm talking about to help you to get in and out of the market at the right time? Take the trial for 99 cents. Do I have a red arrow most recently? No, that timing signal is not getting me out of the market yet. Let's go to one more. The slowest, most conservative timing signal we have is the confirmed call. We're still in the confirmed down call and have been since February 28th of 2020. Folks, from the most conservative standpoint, was that a great call to get you retirees out of the market at the right time? Heck yeah. Look at all, that was the down call, and then look at all of the move to the downside. Folks, if you're not a subscriber to the software, and I'm not trying to hard sell you anything, but for 99 cents, is it worth getting this kind of information to get you in and out of the market at the right time? Notice that even as the market rose, we still haven't gotten a confirmed up call. It is the slowest, most conservative call by design. And knowing, if I'm more retirement based, what am I looking for? Capital preservation. Well, if the market is not saying it's the right time for you to get back in for your capital preservation, are you happy? Sure you are. I know you might say, well, I missed all of this move. Well, if you're retirement minded, did you? What are you looking for? You're looking to get in at a right time and get the right stocks and get out at the right time. This call hasn't generated an up call and you're probably sitting back going, cool. All right. So now we understand the stories that are moving the market. We can now look visually and see what's going on in the market. We have market timing calls that'll get you in and out of the market at the right time. And that's whether I'm looking at the VectorVest Composite or the S&P 500. This is what's going on. So I'm going to back up one more time. If you're currently trading stocks, this is the time to tighten the stops on the stocks as you currently hold. This is not the time to panic and start the panic selling. That's not what I'm telling you to do. Manage your trades, but manage them a little tighter. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.